Legendary short investor Jim Chanos is calling Michael Saylor a salesman and initiating a short trade against MicroStrategy.
Michael Saylor is a wonderful salesman, but that's what he is. He's a salesman. And what he's selling investors is the concept that you give me your money and I'm just going to go buy Bitcoin. And hopefully the value of my stock trades at a premium to the value of that Bitcoin. And so as long as I can keep doing that, I generate value.
Jim, here's my question. And this is true for any other major investor right now. Where else would you invest your money or other people's money right now? The dollar is on track for its worst performance in 3 decades. The United States public debt to GDP looks like a developing nation. And the stock market is at its highest valuation measured against GDP of all time. You remember that movie, Everything, Everywhere, All at Once? Well, everything, everyone, everywhere, all at once is beginning to converge onto Bitcoin. There are no value traits left out there. It's the universal value investment for corporations, billionaires, and regular people like you and me. Oh, and even crypto bros like Charles Hoskinson. There's some data showing that the dollar is collapsing. What do you want to own right now? This is Dante Cook with Bitcoin Simply. Let's go.
I run into crypto people that have been in the business for a decade, and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay, well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's hear it.
The latest pushback is, well, it worked for you, and it worked so well that you're the winner and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all, to it might, to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these giga-brain excuses for why they don't want to do the simplest thing in the world.
And one of the most shocking and insane pieces of news that I've seen, crypto bros have completely given up and have started waving the white flag of their worthless tokens and moving to Bitcoin. Charles Hoskinson, the founder of Cardano, says that he's going to sell some of his tokens in order to build a stablecoin and Bitcoin treasury.
I do believe that it will not materially impact Cardano by doing a conversion of 5 to 10% of the treasury into stable assets and assets like Bitcoin. And in doing this, we can create a yield, and that yield on an annual basis can be used to purchase ADA and over time replenish the treasury. And if this program is successful, then we can actually continue that strategy on an annualized basis, and over a period of 5 to 10 years, potentially grow to $1 billion plus stablecoin treasury and Bitcoin treasury to augment and enhance the ADA value in the treasury that we have. This sets us up for great returns and for a pretty stable floor for the ecosystem as a whole, like you would want in any good sovereign wealth fund.
The crypto founder is realizing, like most crypto founders, that he is operating a zombie company, sort of like Michael Saylor in 2020. But if you saw that there was the best performing asset in the world 11 out of the last 14 years that could also become the medium of exchange, and that very few people own right now, wouldn't you want to buy it as well? This is what got Michael Saylor to flip from saying that Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. He said that back in 2013. And 12 years later, he's replying to Adam Back, one of the people mentioned in the original Bitcoin white paper, saying that Bitcoin is the new hurdle rate. Saylor became so bullish and so outspoken that he was even getting calls from athletes like Saquon of my Eagles. And on brand, he told him not to just put his endorsement money, which he did, into Bitcoin in 2021. He told him to put all of his money into Bitcoin in 2021.
For me, I felt like it was the right time to get involved. Me and my manager, Cuz, and having conversation with Pomp and Jack, it felt like that was the perfect time to do it. And I was able to get on a phone call with Michael Saylor. And back then he told me that I should take all my money and put it in. I think he's doing pretty well. I probably should listen to him.
MicroStrategy has gone from a $500 million company to a $105 billion company. Yet people still think that Bitcoin is going to crash. People still think that it's a bad strategy. But Michael Saylor believes that it's just the opposite, that the bear markets are over. And right now is the best risk-adjusted time to buy Bitcoin that you possibly can.
How do you expect
the asset to continue a price increase at these levels that we've seen? I mean, can it keep that up over the next 5 years, over the next 10 years? And at what point do we see, winter coming again? Because that's been a permanent fixture of this asset class, right? It's gone from 0 or 1,000 to 20, and then back down to 3 or 4, and then up to 50, and then back down to 15, and now up to 110. Like, when does it drop again?
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to 0, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Taz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah.
BlackRock and the ETFs are buying another measure of that. And we've got nation state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
As I mentioned before, the dollar's on track for its worst performance in 30 years. The US dollar is showing signs of collapse, following its typical 10-year historical cycles. And our stocks and our debt, as measured in GDP, well, the charts don't look good right now. Tavi Costa is showing us that equity values are rising much faster than our actual growth. And what's interesting to see is that the dollar is collapsing while the 10-year yields are also rising, the decoupling. And this is why legendary investors like Paul Tudor Jones pulled the siren this week, saying that policymakers are in between a rock and a hard place, and that the typical portfolio that you should own should have stocks, gold, and Bitcoin in order to outpace the high inflation that we're going to see like the 1950s. Investors are waking up to the reality that Bitcoin is not just going to be the best performing store of value, but it can also be a medium of exchange and more moving forward.
And so if you think about today, the average finance user, they have a savings account, they have a checking account, and they have a brokerage account. That's what we're basically seeing recreated in the digital world. You're saving in Bitcoin, you're spending in stable coins, and then you are going and you're speculating on whatever assets you want in your portfolio. What I think the big question becomes, and I don't have the answer, I don't think anyone does yet, is as we continue to see the destruction of the purchasing power of the US dollar, are we going to see people start to price things in Bitcoin? Now, I don't think that's something that's going to happen in 1, 3, maybe even 5 years, but I do think that there is a growing group of people who say, look, this thing called Bitcoin is ultimately going to be a store of value, as it already is, but it will become a medium of exchange as well. It just needs to get to a point where the world all agrees on what is it worth. And if you think in 2018, the world thought it was worth $3,000 a coin. Today, the world thinks it's worth $105,000 a coin. It's going to continue to go higher, and at some point it will reach some market equilibrium. And then when you see that switch over into, okay, now things are priced in Bitcoin, I think that's kind of the hyper-Bitcoinization that the Bitcoiners are waiting for. But there is a long path to get there, and the sequence right now is, why would I want to spend my Bitcoin if it's going to be worth more in the future? Right? I want to spend the dollars that are going to be worth less in the future.
And this is why MicroStrategy isn't just going to be one of 79 companies that hold Bitcoin on its balance sheet, but there's going to be thousands at some point. And this is a mega trend that's just beginning.
As of March 31st of this year, 79 public companies hold a collective $57 billion in Bitcoin on their balance sheets. That's a nearly 160% rise over the past year. What do you attribute that bump to? And generally speaking, why do you think public companies are betting big on Bitcoin?
Yeah, I think there are a few reasons for that. We think this is a mega trend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries or, in fact, in cash accounts. But with the huge money printing and growing deficits, that no longer seems like a valid approach. They need another way to protect their wealth from degradation, and they're turning to the best horse in that race, which is Bitcoin. Beyond that, the investing audience has just recognized that this is a positive strategy. And so companies are being rewarded for taking this bold step of putting Bitcoin on their balance sheet. We think there will ultimately be thousands of companies that do this. We think we're in inning 1 or 2 of this mega trend period, but you're seeing it accelerate over time. It's very exciting.
One of the things that these big companies do that you now have the ability to do as an individual is not to sell your Bitcoin, but to borrow against your Bitcoin. Borrow against the assets on your personal balance sheet. And you can do that with Ledn, the leader in Bitcoin-backed loans since 2018. They've issued over $9 billion worth of loans to tens of thousands of customers and have done so in a fast, transparent, and smooth manner, which is why they have over 1,000 five-star customer reviews. They've never lost a single sat or cent of customer money, and they were one of the first digital lenders to do a digital proof of reserves, so that you know that they have the assets that they claim to. Loans start at just 12.4%, and you can get 0.25% off your first loan by going to learn.ledn.io/simply. One of the things that the most wealthy people do is they don't sell their assets, they continue to pass them down to future generations. And one of the things that they do is they put them into trust, they have them as part of their estates, and they protect them well. One of the ways you can protect your assets from forfeiture or being stolen or plain just not being given to you from an exchange like Coinbase is by removing your keys from the exchange. Work with a consultant and a partner to teach you how to do it the right way. And that's the Bitcoin way. Schedule a free 30-minute consultation with their team to remove your keys from exchanges the right way, confidently, safely, and securely. Schedule a free 30-minute meeting at thebitcoinway.com/simplybitcoin. There's not just a wave of publicly traded companies like MicroStrategy and others, even crypto tokens like Cardano now, I can't believe that I'm saying that are moving to buy Bitcoin as part of their balance sheet in their treasuries. But it's also real estate investors like Donald Trump Jr. and the Trump family, who realize that the scheme that they were once a part of and benefiting from is in fact a Ponzi scheme, a pyramid scheme, and that on a flip of a switch or a blink of an eye, they can be just like the rest of us on the outside looking in.
He did these things. The reason we got into crypto, and we're all in on crypto, and we're doing American Bitcoin, and we have World Liberty Finance and USD1, was because there was a time, and probably I'd been on this show, where I could call any single banker in New York City. They'd pick up the phone. I'd be able to get a loan for whatever real estate project I was doing across the street. Then we got into politics, and all of a sudden, they wouldn't take your call. Right. You couldn't get financing. We were debanked. And what I realized, and my brother realized, because we were the recipients of every subpoena imaginable, was that, you know what, we were actually just the top of this sort of pyramid scheme that we didn't realize we were a part of, that the financial system was totally undemocratized because we had a certain balance sheet and whatever, we could kind of do whatever we wanted. The regular guy was messed up. Now we were all of a sudden in the shoes of the regular guy that wouldn't be able to take advantage of the markets. And we said, what's the solution for that? The answer is crypto. These decentralized platforms where you're not beholden to this, where you create efficiencies. As a guy that did real estate, why am I paying points in and out for title insurance that could be done on the blockchain? So we got into crypto not because it was like, hey, this is the next cool thing. We got into it out of necessity. We got into it because we understood just how quickly we could be turned off, even as an incredible developer from New York City. I mean, I don't think anyone would argue that we didn't change the skylight of New York City, but that disappeared in an instant. I mean, we're getting sued by the New York State AG, $500 million fees for paying back loans on time with interest. These aren't, fair markets. There's nothing egalitarian about any of that. So we actually, as innovators, as people who understand these things, we went all in on a concept that makes total sense because we'd actually been the recipient of how quickly that can be shut off.
And here's the big thesis. The next technological revolution isn't in some other form of technology. It's in money. And Bitcoin is the bedrock of it. Whether we're talking about Bitcoin or whether we're talking about layer 2s like Lightning and stable coins that are being built on top of Bitcoin. According to people who live, breathe, and eat this stuff like Jack Mallers, we're just at the beginning. And $2 trillion is scratching the surface for the hundreds of trillions of dollars that are out there for Bitcoin to consume in the future.
You're talking about humans have created and are looking to store and later exchange anywhere between $300 to $500 trillion worth of purchasing power today. And for me, that's the opportunity Bitcoin is going after, is that people forget money is a technology, just like any other technology we've invented. We invented it to scale society and solve for barter. And so the technology performs a very, very specific use case in the marketplace. And that use case is an ability to store and later exchange value within the market. Money is the one market good that you do not consume. You know, your Coca-Cola, your cheeseburger, your airplane, your car, you consume those things. You consume the car to move you around. You consume the airplane to fly you around. You consume the cheeseburger and the Coke as food and calories. Money is the one you don't consume. You acquire it to save it, not consume it, and to later exchange it for the things you need. And so under all of that logic, I personally believe in today's purchasing power terms, Bitcoin is competing over $300 to $500 trillion worth of value. And right now it's at 2. So in purchasing power terms, I think it's got, 1 to 200-300x left in it. And that's not in dollar terms, because obviously as the dollar gets debased, it's distorting your understanding of purchasing power.
You have to be able to see it and be patient, because these things will take much longer than you think. And you can get mad or upset or hate on people like Michael Saylor for seeing what's obvious. The dollar is losing its value, and there's not a lot of good places for you to invest your capital right now. They're turning to Bitcoin, and they're not investing into 10 things. They're investing into one thing and focusing on that egg in the basket with all of their focus and attention. It might be wise for you and me to do the same. One of the ways that they're focusing all of their attention on this one asset class is by learning everything that they can about it. You can learn about all the makers, manufacturers, and builders in this space by coming down to Dallas, Texas from November 11th through November 13th at the Bitcoin Mining Disrupt Conference, the largest mining expo conference in the world. Get 20% off your ticket by using the promo code SimplyBitcoin. If you got value from this episode, like always, please like, do, and share. And as always, happy stacking.